I have lived long enough to know that opportunities must be seized or they will be lost.
Welcome back to Wall Street Radio. I'm your host, Tanner Yarton, here with Dan Young. In this episode, we're going to be talking about the events that transpired in Congress yesterday with Trump and his speech. We'll be talking about the Ukraine crisis, what's the end goal for Zelensky, Putin, and the United States, uncertainty in the markets based on that, and what that could mean as a potential trade for gold, as well as the articles that we have coming out over the next week and the article that came out yesterday. Enjoy. Cool beans.
Man, oh man, where to begin today?
Well, I think the most obvious is to begin with last night's speech in Congress. I think it was pretty much as most people expected it to be, and I don't necessarily know that we need to spend a ton of time talking about it, but some events did transpire. We did have an individual thrown out within the first 5 minutes, followed by an hour of just victory lapping from the administration.
Yeah. Al Green just would not let Trump speak for the first, 5 minutes, and they actually had to remove him, which I've never seen. Granted, I don't watch that many speeches, but I did tune in just to see what it would be about. And that's the whole theme as to why media loves Trump. And as much as CNN and MSNBC and even Fox, or as much as people, whether they're on the left or the right, want to ever disagree with Trump, the media loves this. They're making so much money right now.
Yeah, and you would know about that. What is from the Bloomberg perspective, are periods of time where you have more political turmoil obviously better for business? What's kind of like the war room look like during something like that?
Yeah, I mean, viewership increases substantially on articles, which just leads to stickiness in the product itself, right? So just like the bare basic, is there more traumatic news, volatile news that we can report on? And then does that create a stickier client purchasing a product, meaning that they need to be on top of all of this? So yeah, I mean, I would say the bandwidth of articles being pushed out right now compared to the past 3 to 4 years when Biden was in office is already 1.5x, if not more. And so again, that type of article news creation, just from a information article perspective, viewers reading articles, that's going to translate to revenue in dollars. But then you think about the media side, like the news station and all that, that's going to create tremendous wealth for businesses. So pure media conglomerates like CNN is making a ton of money right now.
Yeah, that's always interesting to think. When more, I mean, obviously when more is happening, there's more to report on. But when you have somebody like a Trump in office, the media companies just have an absolute field day. And usually it's never good things. I mean, lately, since the majority of the media is more left leaning. But I do want to quickly touch on one thing that was mentioned yesterday, which I don't think we've heard before, which is, I think, such a great play by Trump. It's to be able to write off your the interest on car loans if they're produced domestically. Now, there was a lot of concern going into the presidency about cutting funding for EVs and how that would impact Elon Musk. And since Elon Musk is so close to Trump, you wouldn't expect him to kind of dog on his boy like that. But this new idea of being able to write off the interest on car loans that are produced domestically, that gets Elon right back in the conversation because Teslas are produced domestically. So an interesting little point that he made kind of halfway through the speech, he just kind of threw it in. And I don't know about you, but I hadn't heard that before. And I think that's a good idea.
Yeah, I've heard that thrown around a couple times actually. I thought the line was pretty interesting when he was talking about not having any oligarchies, or what was it, no bureaucrats that were unelected and taking a part in government, and all the Democrats just started booing because Musk was there. Yeah, no, I've heard that before, and I think we are scratching the surface of a little bit of what we were talking about and have been talking about the past couple of weeks, which is this infrastructure America first incentive. If you're producing here, manufacturing here, creating here. Last night's speech, while it did not cement a lot of this, I could not help but hear different things in what he was saying, which is the people that come here and produce here are going to profit here, and the ones that don't are going to miss out tremendously. And the next stage of that is the infrastructure. right? I mean, like, how do you even supply and make sure that the manufacturing that we have coming into the US is able to be maintained at the current level that we expect, right? And what Trump expects for the next 3 to 4 years and even beyond that. Um, so that's where we're going to have to see a little bit. And you talked about farming as well. So like farming is going to be a big thing as a food production is going to increase just because if we do these tariffs on Canada and Mexico, as we've seen before, a large percent of the poultry, the eggs, and produce in general comes from those two countries. And so that will have to increase the new incentives to farmers to make sure that they're able to produce their crops and be profitable. And that's an interesting development. Like it's all happening at once, so it's kind of hard to see what's actually going to shake out. But I think it's exciting personally just to have more of an infrastructure in America. We all know my downsides, which is more like corporate corruption and greed and that type of infiltration into the government. If you just said in a box, like that, this is my thing. This is how I know if it's a good idea or not. No matter who says it, if Trump says it, if Biden says it, Obama, Bush, like it doesn't matter. Just the statement, we want more jobs being created in America. Yes. Like we want farmers to be incentivized and more profitable to produce America crops. Yes. Like that's how I kind of follow these things, and try and stay away from like who is the actual person saying it.
Yeah.
Because that's when it can get like really muddled.
I totally agree. And we brought that up before. Like if you convolute your investment strategy or your opinions on the markets too much with your own personal politics, what ends up happening is you end up just missing out on opportunities because you're too worried about what's going wrong with the person that you don't like who might be in a position of power versus just recognizing where the value might be for you personally in that new administration. So yeah, I think all those comments about infrastructure goes right in line with what we've been talking about for the last couple of months and kind of ties into what I believe to be Trump's grand strategy, which he did mention last night, which is short-term pain. There is going to be pain to reset these things and kind of bring them back to earth and bring them back to the United States. Absolutely. But in the long term, the plan is becoming more clear, and it's quite obvious what sectors, what industries are going to be impacted most based on that. And it's just going to be a matter of, can we find the right value to be purchasing these businesses and kind of take advantage of that profitability that you mentioned for American businesses, enterprise, and especially farmers and infrastructure.
Yeah. I mean, I will say the one thing I did not like last night was just the clear division there is right now in the country between left and right, Democrat and Republican. Again, I don't watch that many of those speeches. I don't remember one that was so apparently divided though. Like I thought it was really weird that the Democrats had auction paddles with like Elon steals and false and like all these things that
the one guy with the lies sign,
yeah. It just, I don't know. It doesn't, well, it's unprofessional in my opinion. Like these are supposed to be represented leaders of our country. It just seems kind of like a petty thing. And I know it creates a good meme, and it's probably, if you're on the left and you're a Democrat, you probably loved it. If you're on the right and you're a Republican, you probably hated it. Like I said before, I do always stay middle aisle as much as I can. I just thought it was really weird. Like it's not really what a leader would do. It doesn't feel like we're trying to combine and work together as a party. It just feels like very, very divided. And I thought it was really interesting. A couple sentences into his speech, Trump was like, "It doesn't matter what I do. I could cure cancer. I could I could reduce the debt and balance the budget, and they would still be upset at me." And that was a really bold statement to make pretty early on in the speech, but I think it resonates to just like how divided we are. And that's the biggest challenge that Trump has with accomplishing what he wants to do is, even if he brought about greatness to the country, right? Even if he made America great again, no one on the left would ever give him credit. And likewise, to be completely honest with you, I feel the same way if Biden had actually made America great, I don't think the right would ever give him his due credit. So that's what happens when you have like a really divisive leader. Now, if you had someone like in previous days, I know there's always been left and right, but there seemed to be a little bit more of a middle ground, like in the 80s and 90s. Now, if like a president back then had made America great, it feels like a majority of the American citizens would accept that and be able to like announce it together. But I don't know, just it kind of makes me wonder what the future holds for the parties and what does success actually look like. Because you think about like the Ukraine situation, for example, there was one time all of yesterday's speech when both Republicans and Democrats were like actually agreeing about something. No, it wasn't an agreement. It was like the Democrats started clapping a lot when they talked about X amount of dollars being spent on Ukraine.
Yeah,
And
yeah, yeah.
then
That was the
and
only
then
thing they clapped for. Yeah.
yeah, and then Trump made a crazy comment to Elizabeth Warren and called her Pocahontas. Did you see that?
Yeah. Oh, yeah.
That was absolutely that was wild. But like that's the only thing they clapped for. And there was, there was like that special secret agent announcement with that little kid who was there who has like, really serious cancer and his life expectancy was shortened significantly. Like they weren't standing and clapping for him. A couple did, but like most of them didn't. I don't know. It just feels like when everything becomes wrong or right, no matter what the subject is, but because of the person who's actually like giving the speech, that's when I start getting unsettled. And that's something that I can never relate to personally. Like if a person I hate, visited a children's cancer hospital, just as an example, like I would support them in doing that, even though I hate them.
Yeah.
Like especially if you're an elected leader of the people. Like I'm talking about myself as a regular citizen. If you're like an elected leader, you have to show a little bit more gumption and like maturity in these situations than like holding up auction panels. That's just like you got to be able to work together. So I want to talk about Ukraine a little bit and like what does success actually look like there. But just overall, my thought was a bit concerning, just the divisiveness that I saw.
Yeah, I agree. And I mean, like I said, the points were mostly just victory lap points besides a couple of new developments there. And I don't think we expected anything else. But yeah, I think that's a good point that you bring up of like you personally, if you were to see even somebody on the other side do something good, like you can still support that. And I agree with that. Obviously, I'd like to see, I think I lean a little bit more right. Just personally, but at the same time, if somebody said, "Oh yeah, you're getting invited to the White House to be recognized for whatever," and it happens to be, Joe Biden or Barack Obama, like, dude, we're going to the White House. Like, that's super cool. This is the president. Like, you have to have some kind of support for them, even if you don't agree with all of their politics, just because you want them to do good for your country at the end of
Yeah.
the day.
Yeah, I agree with that. I think the thing I'm looking for, which neither of us have, but what I saw and what I see continually right now is that there's a lot of hatred, right? Like
Yeah.
I don't hate anyone on the other side. I feel like right now, and this was the same way. This is not just the left versus the right. When Biden was in office, the right hated him. A lot of people hated him. Right now, a lot of people on the left hate Trump. Like I don't have that hatred,
Yeah.
and I don't believe you do either. And maybe that's just from us spending our time in the markets and being so involved with all the news from different angles. Where I was talking to someone the other day who was like very upset at Trump and they're left leaning. And I was like, you have to understand that the way you're talking and acting and like seeing the world is the way that my right leaning friends saw the world for the past 4 years. Right. So like, I think that's why I'm always in the middle, because every 4 years or anytime it switches from left to right, I see the exact same behaviors out of the people. They just swap.
Yeah.
So it's just like, for me, it's that hatred that kind of is always apparently different and it just feels weird.
Yeah, it could be our slogan at this point in time, but when we're investing and because we're so involved in markets, we have to be more down the middle as far as our strategy goes. Like we can't get too against like, do I think clean energy is good? No, not really. It's super land consumptive, but at the same time, I'm still going to invest in those businesses if the right president is there to support them, and and I think that's something that the general populace just doesn't get because they're not as active as we are with the news and keeping up with it. And also their goals are different. Our goals aren't to make money.
Right.
So we have to remain a little bit more down the middle. But yeah, shifting topics here a little bit over to Ukraine. We did have a tweet come out from Zelensky yesterday. Let me actually pull that up real quick. and he had come back to the table, back to the table to negotiate with the United States. Oh gosh, this guy tweets a lot. Good heavens.
Start scrolling.
Yeah, start scrolling. But he did end up coming back to the table with the United States, or at least he plans to. And are you surprised? I'm not particularly surprised to see that happen. He shopped around at the United States. It obviously went the way it went. We talked about it. Then he goes over to Europe and sees what he can do over there in the Western countries, and not a lot of support over there. I saw a map recently that I think was from Reddit, believe it or not, that showed what percentage of the country would go to war for their country. And all of the Western countries were low 30%, 20%. And all the ones right on the border of Russia were high 60s into the 70s. And, when Zelensky's shopping around for funding, he has to go to those Western countries. But those Western countries are not willing to go to war like the poorer ones are. So where he's going to get money from, they're not willing to fork over as much because it just doesn't align with their people's beliefs.
Yeah, it's one thing to say we support you. It's another thing to put your troops on a battlefield. Like the infrastructure as a country of Spain, France, the UK, and a number of other countries like Germany, they don't have the monetary value or the ability to send resources even to an nth degree that the US does. It's like, if you want to go against a Russia or a China, you're going to need the strength and support of a United States. Even if you have the entire European Union with you, it honestly is still not going to be enough. And again, at what point, like as a leader, you can't take that risk with your country. Like you're elected to protect your country and its citizens, and putting a lot of chips into the Ukraine situation, which can backfire very quickly. Like the last thing you want, I'm just going to use hypothetically, let's say Germany is one that sides with Ukraine, and they're like, all right, we're going to support you. We're going to send our troops in. We're going to give you missiles. We're going to give you all this funding. Let's just say that.
Mm-hmm.
And then a couple weeks later, Spain and Ireland and the UK, whoever it is, they're like, oh, we're actually like not ready to do this. We're going to pull out. And now Germany is the only one supporting Ukraine. It's like, that doesn't make a difference, right? That just, it elongates the battle, but it doesn't change what the war outcome will be. And then Germany is now like, they should actually pull off support from Ukraine because Russia would wipe out Germany in an instant. And that's why they have alliances across the EU. And that's why different things exist in that regard. But I still think it's a tricky situation that you can't just supplement the US by going to the Europe. Like that's just not how it works.
You can't make that trade. Yeah, you can't trade Western Europe for the United States as far as funding goes. It also brings up a good point about geographically the situation. All the countries that are on the border of Russia, either countries that were previously a part of, that Eastern European theater, which was the war theater for World War II, those countries aren't going to send troops to Ukraine because it leaves them exposed to Russia. So Zelensky's going to get no help from them because they're sitting there going, geez, this is not looking good for you. If they invade us after we've given you troops to defend Ukraine, we're screwed. And then Russia just has clean access to the middle of Europe. So from a continental battleground perspective, these countries have to think about it a little bit different than we do, right? Because we're a maritime power. We would be sending troops overseas to handle this. We wouldn't have to worry about a pushback, a Russia invasion via Alaska. I don't think that would happen. So for these countries that are in Europe, they have to think about not only the funding that they send, but also the troops that they send, in the sense that if they send too many, well, then it leaves their door open on their battleground.
Yeah, and it just elongates the solution that everyone wants, which is peace. And that's one of the problems I had with the takeaway. I had a couple of big problems. One, right, the Zelensky-Trump interview should have never been public.
Yeah,
that was a big miss. We got a great JD Vance meme out of it. Like I don't know what face he was making in that photo, but it's hilarious. But the big thing here is that you have to have private conversations, closed doors about sensitive topics like these, because it makes no one looks good in this. You could either not like Zelensky for being and acting the way he did, which we are providing support that we definitely, from a definitive standpoint, we don't need to provide. And if Trump wants to create peace, even if it's with Putin, that doesn't mean we're just allowing Putin to have bad behavior. If people don't people forgot, what was it, like 5 or 6 years ago, the Russians shot down a chartered commercial aircraft and killed like 250 people out of the sky. He's not a good guy. He doesn't do good things, but that doesn't mean that you can't work to resolve and find peace, right? It doesn't mean we need to go to war with Russia. And so that's what, from my perspective, that's what I believe Trump is trying to do. Is he trying to be friendly with Putin? Maybe. Is that strategic? Is that like a personal decision he's making about his own will? I don't think so. I think he's just trying to find peace. And that is the best economical and viable solution for both countries and Ukraine to survive. I mean, that's going to end mass casualties in the area. And that's just a realistic part of business, right? Sometimes people win, sometimes people lose. Sometimes it's not about right or wrong. It's just about ending the amount of deaths that are happening in the region and finding, at the end of the day, something that's going to be compromisable between all parties. And so Zelensky, in that tweet, he essentially says, like, I need Trump's support. I encourage it. I want it. And he's looking forward to working with us after, again, going to Europe without us. I just think it's the beautiful thing about these types of situations is you can debate back and forth about who you agree with. There's a lot of people that agree with Zelensky. There's a lot that agree with Trump. My whole thing is that I know Zelensky wants to fight back. I know, obviously, Ukraine has gone through a traumatic invasion, and a lot of people have died, and that's absolutely terrible. But I also think as a leader, you need to know when to fight and when to use your resources to find a solution for peace, because elected leaders, if you're supposed to protect your people, I don't know if they should continue to fight. I'm not saying they should give up, right? I'm not saying they should give their land to Russia. I'm just saying that finding alternative solutions besides missiles and billions of dollars from the US, that should probably, be a solution he entertains.
Yeah, I agree. And I guess it makes you think like, okay, well, what does the solution look like? And I think the most obvious one that would end the war the fastest would be some kind of recession for Ukraine. Russia would probably want some kind of land in the deal. And then the United States would stop funding Ukraine. They wouldn't have to be in a war anymore. And then maybe that would open up the door for some kind of leverage for the US to have over Russia. Like if we say, okay, Russia can have whatever land that they want, some of it, some kind of land deal goes down. And then it's like, okay, well, we let you do that. So now you're going to stop there and you're not allowed to, push into some of the other European theater countries. Because Russia has always been a country of conquest. That's not new in their history. They've always been a continental conquest power. And if it means sacrificing a piece of Ukraine to slow that down or stop it altogether with some kind of deal, is that the best solution? I don't know, but that's the one that immediately comes to my mind. Is we need to get some kind of leverage over Russia to stop what they're doing, and if that means giving up some of Ukraine, that might be the solution for it. Obviously, nobody wants to lose their land, but it's also worth remembering that now that these things are so publicized, it's easy for us to take sides and feel emotion. But at the end of the day, I mean, conquest has happened forever. It's not like this is not new. So part of me is like, I don't know. It's tough. It makes you sound like a really bad person to talk about these things. But just looking back throughout history, these are Russia's cards every time. And you either go to war with them or you concede to some degree, gain some leverage, and then hope it stops.
Yeah. And it's really hard to it's actually impossible to speak from this perspective because
yes,
we're not Ukrainian. Like we have
right.
no idea what that's like. We're in the United States. We're both born in the United States. well after any type of significant war has taken place on the homeland. So like, there's nothing that we can say that would be the right answer. From our perspective, it's more just billions and billions of dollars that we're spending to help fund Ukraine and have spent, and we've sent weapons and we've sent missiles and we've sent all these things. The war has been going on a long time. It doesn't
3 years
seem,
now.
yeah, like for me personally, like this is where I can speak. I don't want another Middle East type situation, right? That war was a mistake. It never ended. We lost a ton of soldiers. We spent a lot of money, probably for the wrong purposes as well. That's, a little bit to do with the administration that was in place, but we made a lot of mistakes. The last thing, and we had more purpose being there, right? The terrorist attacks that happened on our soil. This is a different situation. It wasn't anything on our end that happened, and we still continue to support a country greater than really like recently US has supported. I don't remember this type of monetary and defense support of a country in recent times. Like we've shelled out and we've done a lot for them in terms of just like, I mean, our tax dollars have gone towards this. So for people who are upset at Trump not assisting Ukraine, it's like, listen, we have been assisting them for the 2+ years this war has been going on. There's clearly no end in sight. Like, what are we going to do now? Because we can't just continue to funnel money into this without a resolution. What does winning look like in this scenario? And that's unclear to me, at least.
Yeah. And it's hard for us, like you said, sitting from the position that we do, because we're in a country that has no continental threats. We make the most money, and we've been the world's protector, the world's shield for so long that it's really easy for us to just kind of sit here and, I mean, like I just did, just kind of laissez-faire, hands off, and just say, oh yeah, we'll come to some kind of a deal. But we don't know it from the perspective of the people that are being invaded, of course. I mean, but the loss of life has been tremendous. The evisceration of wealth has been tremendous. I mean, uh, Ukraine's producing nothing. All the land, the battleground, I mean, all that's going to have to be rebuilt. Like the continental warfare is incredibly expensive, and we've been doing this for 3 years now. Hundreds of billions of dollars at this point in damage, plus hundreds of billions of dollars in stimulus to them. So, yeah, I don't have a clear line on what could happen there, but I think it has to end in some kind of a deal that gives us leverage over Russia to stop the continuance of this happening, right? To stop them from going to Latvia, Estonia, Finland, any of the countries that are bordering up north.
Yeah, we just don't want this to tic-tac-toe into something much worse.
Right.
Like that's what the fear is that it'll domino into a World War III. It'll create more tension. Like that will only happen if we continue to send money and weapons to Ukraine, in my opinion. Like if you elongate the battle, you're just going to fester it. And when you fester it and tension builds, like it's going to erupt. And when it erupts, it's going to be everywhere and it's going to hit a number of countries. And for me, it's like, let's actually reduce the boil, right? Let's turn down the fire. Let's actively work and negotiate, even if it is with someone like Putin who does terrible things. Like, let's actually negotiate and try and find peace. And that doesn't mean Putin is winning or that you're giving in to Russia's demand. Like, that's not what this means. It just means that you're trying to find peace, which should be everyone's goal. If you're like not for finding a peaceful solution here and you just want to send more money and weapons to Ukraine, I'm not really sure what like your outcome is, because if you think that we're just going to battle Russia from Ukraine, that's a war that never ends, and that's a very volatile war that could potentially come back to the US.
Yeah, that's just an evisceration of wealth over a long period of time. But I understand why so many Americans are just kind of the opinion that that's the best way to do it, because they don't have any solutions themselves. I mean, we just sat here and we've been talking about it for 20 minutes now, and it's tough for us to find a solution. So it's like, I understand where the populace is coming from and the idea that they just think, oh yeah, we'll just keep sending them money, keeping this war going in the hopes that they'll win. They will not win. There's no way. We're just prolonging the inevitable, really. Yeah. So anyways, that causes a lot of uncertainty in the market, of course, which we've been seeing over the last few weeks play out. Not only because of the global supply chain impacts, but also because of our personal spending, right? That's been Trump's biggest topic of conversation right now. And if we anticipate to continue to spend, then that's going to have long-term impacts on our market. But more importantly, it's going to have impacts on all of these European nations that have had to completely rework their natural gas production or their natural gas imports, since Russia was the primary natural gas exporter to most of Europe. Now that's been shut off. We've seen Germany switch to coal power. They're using coal reserves to fuel homes and businesses. So it's interesting how these global conflicts, while it might seem compartmentalized to just Russia and Ukraine, the impacts are actually much wider spread. And that again is just uncertainty in the market and causes us to go down, because generally when there's uncertainty, equities fall. There's never safety above, but there's always safety below for equities prices. So we're seeing that a little bit right now. We're seeing the gold trade continue to grind higher with that in mind, since gold's the uncertainty hedge, right? If you have uncertainty in markets, gold is generally a place of safety that people fall to. And that trade has been tremendous, even through all this turmoil.
Yeah, silver is also doing very nicely today.
Yeah, I mean, when I say gold, I'm talking about commodities as a whole. Like gold and silver generally trade together. And gold's been stronger lately. I personally positioned in gold, not silver, just because lately there's been no strength in silver versus gold.
So for you, as someone who's actively positioning into gold or any type of metal that's going to have safety behind it, which I don't do personally, but I know you've done it for quite some time, and obviously gold has been on a really nice run recently. Like, how do you manage that equity behind it?
Yeah, so there's a couple of ways you can do it. I have a silver stash. I have a physical stash of gold and silver, which is just kind of like stuff I pick up along the way. Like I have some friends that are really big into alt investments. They've got collectibles and gold and silver, things that are tangible. So I sometimes will buy from them, or I'll use gold GLD, which is the ETF. It's a large trust in Europe that holds I want to say 5.7 million ounces of gold. That figure could be off. I'll have to look into it, but huge gold trust, and that's the way that I've positioned in it from an equity standpoint.
Got it. That makes sense.
Yeah, and I don't know if you have any other ones that you would suggest, but I think that's the best way to do it. It's the biggest trust there is out there. So as far as like following spot price and costing the least in management fee, I think that's the best option for that.
Yeah, there's another really good one that I was referred to probably 4 or 5 years ago from a family friend. I'll have to look it up, and I'll get back on the next pod about what it is, but it's transferable to, it's a equity that you purchase, but it's also transferable at any time. You can turn in your assets for the physical metal itself.
That's
And
actually pretty cool.
yeah, and it's US based. So
Okay.
yeah, so I'll figure that out, and I'll say it next time.
Yeah, I know the one that I have is definitely in Europe. It's two big vault. They have a silver, which is SLV, and then gold, which is GLD. But that's kind of been my primary exposure. And then the secondary is obviously physical. Physical's tough though, because a lot of times you have to pay pretty heavy premiums to get bullion, especially from large retailers. So it's kind of like, for me, it's kind of something, if I see something, I'll pick it up along the way. But if it's like, I won't go out and purchase like a sleeve of silver coins, because usually the premiums on those are pretty high.
Right. Yeah, that makes sense. You did say premium, which made me think of the article yesterday.
Oh,
And
yeah.
I wanted to dive a little bit, because we're circulating around this idea of value, right? Like, what has value? Where's their premium? How can you take advantage of it in a market that's declining? And it also goes back, because you asked me, what am I doing right now to kind of protect, but also stay active? I mean, if you're in metals, I'm heavy cash. I mean, I'm not heavy cash. I'm just like more cash than equity right now. But this time for me, any type of pullback, especially when the S&P is pulling back to the 50 SMA, the moving average, and then especially if it goes anywhere below that, right? What I'm going to do is I'm going to look at associated charts of long names that I prefer to be into because of their value, which I'll explain, and then start, DCAing into those positions, or, adding very slowly as I see best entries take place on these very large exaggerated moves down. And the things that I talk about in the article, but things that I look for specifically, is distance to moving average or exaggeration above or below. So if it's above, obviously you're going to say, hey, this may be a good time to sell or reposition. If it's below, it's a nice time to start an entry or maybe exit one. But the other two things that are really important are fair value and then historical premium. And so fair value essentially is you're just going to look of the intrinsic value of the company itself, especially when you can relate it to its peers. And that circulates really well and timely with premium. So most companies that operate on the market are allocated a multiple of premium to their business in the case of a buyout, in the case of what their growth rate is. Sometimes it's different. You can measure it for different things, but there's going to be an allotted premium. Websites, for example, like FastGraph, obviously the terminal does this, but one that's much cheaper and that I use right now is called FastGraphs. You can look in real time and see what is the premium, the historical premium from a PE perspective on a given stock versus its historical average. And if the price for me is well below that premium historical average and they're well below their moving averages, it's a good time for me to buy within value, because what that's telling me is getting back to par premium for a normal market participating buyer. Like, it's going to allow me to get another 5-10% on top of this. So for example, if something like Nice, the company Nice, is 10% below their historical premium, that to me tells me just a return to normal par value is a 10% gain in this equity. And then you compare that to fair value and saying, okay, but like, what's their cash flow? What's their free cash flow? Not only just operating, but free cash flow. How does that relate to their historicals? And once you start combining all of these factors, especially and then you look at the chart and you see where are the moving averages from a technical perspective, you can start aligning really nice entries and, more importantly, mitigate your risk. And so that's what I do. Right now, I take a lot of cash and I slowly start to enter these names that I've been tracking for a long time. And I look specifically at these things because for me, moving averages, there's a bit of there's like a very small amount of fundamental / sentimental trade there where a majority of it is technical, right? Your moving averages are majority technical trading, but there is a little bit of sentiment trading you can pull from it and derive from it. Fair value and historical premium comps, like those are all fundamentally driven. And so when you combine the two, it bodes really well for reducing risk upon entries or trades. And that's what I'm generally looking for right now. Like with the move down recently, I'm looking for heavily exaggerated moves because most of these, high earnings, high growth companies that I value, they've now undone the gap up that they had from earnings, and more so. So they've already filled the gap down. They're even tracing back down to well below their 50-day. And then I pull up their historical premiums and I pull up the fair value, and their price is now way below those meters. And it's like, okay, they're actually worth more. It's not arbitrage, but it's like as close as you could get to understanding like where there may be more lean into like an arbitrage type state, which is it's as simple as, okay, for the past 20 years, this company has operated at 20x premium. Right now it's operating at 12. This is the lowest it's been in 20 years, right? What are your odds? What's your risk reward taking a position now? It's pretty high. So that's kind of like it's pretty basic, but like also high level as to what I'm looking at right now.
Yeah. And it's also important to recognize that sometimes those premiums are low because there are external factors impacting that business. So just buying strictly on those metrics is like, the businesses that you're buying. So it's easy for you to recognize where the multiples are and then buy based on that. But if you don't know what kind of business you're buying into and you're just looking at these metrics as standalones, it can kind of get you into some trouble because like something like a Chegg, right? If you were to look at that, yes, they're decelerating because of ChatGPT, the introduction of AI. But if you were to look at that from a premiums perspective, you'd be like, wow, this thing's trading at a 0 premium versus a historical 56 or 60. And you might look at that and go, oh, this is a perfect buy opportunity, without recognizing why they're trading down so much when maybe the market's going up. So it's important to tie together many of these factors, not just where some of those value metrics are, unless you know the business really well. And it's one that consistently delivers on guidance. Like for me personally, if I'm looking at something that's value based, I want to see, or I'm only going to do it on a business that consistently hits their 2-year guidances. If they have a track record of hitting, 12 out of their 15 2-year forward guidance metrics, that to me is a great place to start if you're looking for like a value buy. Whereas some companies that I have no idea about, they might be trading deep into their value, but maybe there's external factors that I'm unaware of. That's the reason why the market is pricing in that decline.
Yeah, exactly. I'm glad you brought that up because it's important to know your business. And if you just went into, for example, Fast Graphs and you typed in a ticker and you looked at what the fair value was or the premium was historically to PE and it was below, you can't just buy based off that, right? Because sometimes, and most of the times with these growth oriented stocks, they're going to be placed well above the premium and the premium is just going to increase, especially those that don't have a lot of historical value. Like they're going to create new data points as they increasingly exceed the premium as for versus what has existed historically. So it's like not uncommon to see fair value, like a price operating well above fair value or well above premium to PE if it's a growth related stock. And most of you should, understand that. For me, it's like it's finding those stocks that operate on a consistent basis right above or well above on a consistent basis, and then they drop and they pull back within fair value during a pullback. But they're still, like you said, consistent on their earnings, consistent on their guidance. Because for me, that just says this is an opportune time to buy. Nothing fundamentally has changed with the business. It's just the broader market that's pulling this down. And like all market drops, or most outside of financial crisis, flash crash, COVID crash, like really black swan events, this will just be a cooling period for the market and there will be acceleration. I think like last time I actually looked at the market right now, S&P is up now over 1%. So like a lot of the names I've been buying on this dip the past 2-3 days, really since last Friday, I've been starting to slowly enter some positions. They're up pretty nicely because I just, these moves down were so exaggerated on well-performed, trusted names. And that's when you should be, in my opinion, that's when I'm allocating risk into this instead of hedging with like a metal or a gold. And that's just, again, my style. And something that everyone needs to find for themselves is like, what is comfortability to me? What do I, how do I trade well? What's consistent and measurable?
Yeah. A really good example of this from recently, at least personally, and how you can use this in kind of like a shorter term setting is something like the Carvana bankruptcy a couple of years ago. So Carvana obviously saw a huge run during COVID with the car vending machine. And eventually that kind of slowed down in 2022 and the used car market took a huge tumble. And Carvana was at a period of time where they had some debts that were coming due over the next couple of years, and they were looking like they were facing bankruptcy. Well, flash forward a few months, stocks trading at $5, and they restructure that debt, give themselves a few extra years to kind of turn it around. And suddenly that bankruptcy probability goes from almost 100% to almost 0% very quickly. So then you utilize your fair values and you recognize, okay, well, what does this thing usually trade at premium wise? And you allocate, a certain figure to it. Like I remember when they were trading around $5, the likelihood of bankruptcy was almost zero with the restructuring of that debt, but the value had not yet represented that idea that they were not going to go bankrupt. It was still representing as if they were going to go bankrupt. So that offered an incredible value on a name that's coming out of bankruptcy where the price had not caught up to the average value that it usually carries, that average premium that it usually carries. And that offered a very clean upside move in a very short period of time. So not only can you do this for long-term investing, but also just recognizing where your businesses fall fundamentally is important for shorter or medium-term trading or swinging as well. But I think that about wraps it for the core topics that we had today. We do have a couple of articles coming up. I do want to do an analysis on the semiconductor market right now. Like we mentioned earlier, Trump is bringing Taiwan Semiconductors to the United States. What's that going to look like for costs? What's that going to look like for the value of the businesses that are associated? NVIDIA, ASML, TSM, MU, and the rest of that value chain for semiconductors, which I'm not sure if we've actually gone through that on here. Maybe that's worth looking at in the future. But we've also got a robotics article coming up, which is going to discuss the state of robotics. It's not necessarily going to be a long thesis investment. I don't think either of us own anything that's closely tied to robotics at the current moment, but there's a lot of opportunity emerging. And when these companies are when they do hit the ground running, that's when we'll be prepared by writing and fleshing out the thesis ahead of time, like right about now. So look forward to those. Those should roll out over the next week or so. And we do have another podcast coming out on Friday, which is just going to kind of wrap up the week, see where we are. But other than that, check us out on social media. We've both got Twitter. We're on Substack, of course, at Sebs, which is where you might be listening to this now. I'll mention it one more time. We are now on Substack as well for the podcasts. So you can read the articles there as well as listen to the podcast. And yeah, that's all. See you guys.
Now watch this drive.